Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of July 22nd, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was certainly a good week for Delaware mortgage rates. Mortgage rates moved lower, continuing a short-term trend of bonds moving higher, interest rates moving lower. If you look at the chart on your screen, you can see since May we're on this long-term downtrend of bonds going lower, interest rates moving higher. And then July 8th, when the bonds hit their all-time record low for 2 years, we rebounded off of that and started to move higher. We've continued that trend for the last 2 weeks. So that is good news. And basically what happened was Federal Chairman Ben Bernanke reaffirmed that the Fed's easy money policy would continue to 2014. So that helped mortgage bonds rally and continue that rally. Now on Friday we closed above something called the 25-day moving average. That was good news for the bond. That's impetus for it to move higher. So we are going to recommend floating your Delaware mortgage interest rate to start the week. Now, but we do have this long-term trend line we're battling. If you look at the chart on the screen, you can see that blue line going down. That's a falling trend line. That is what has had mortgage interest rates moving lower and lower. Now, each time we've hit this falling trend line and the bond has not broken through, it got turned lower and interest rates jumped higher. So on Monday to start the week, we're going to cautiously float, hoping we can build on this momentum and break through that falling trend line. If we break through that falling trend line, that could start the summer rally that some people are talking about, where interest rates could move lower, maybe back down to even 4%. But if, again, we hit that line and don't break through, we're going to quickly switch to a locking stance, because if you look at the chart, that's going to show that mortgage rates will jump higher, and you'll miss this great opportunity of the rates moving lower. Now, if we move to the economic news, the Consumer Price Index, the CPI, rose from May 2013 to June 2013 by 0.5%. The CPI measures the price increase or decrease of the price of goods and services that consumers pay. So CPI is a measure of inflation. That jumping up, not good news for bonds, because inflation's the enemy of bonds. Inflation kicks in, rates go up. But if you look at the core CPI, that's where we strip out the volatile price of gasoline and food, it actually ticked down, and that's more what the Feds watch. So that was good news that that ticked down. So that is why the Feds are saying the threat of inflation is still very low. We also saw on Thursday a release of the weekly jobless claims, and that actually ticked down lower by 24,000 claims to 334,000 jobs. They were expecting 336,000 jobless claims, came in at 334,000. So that's good, but the improvement in the jobless claims could be attributed to the summer shutdown of factories. So we got to see what happens this week, see if it still comes in lower than expected. In other economic news, we saw retail sales for June 2013 came in lower at 0.4%, which is down from 0.5% in May. Retail sales make up 30% of consumer spending. So the latest jobs report showed that there was a lot of part-time jobs and low-paying jobs that were created. So if people's wages don't go up, retail sales aren't going to go up. So we need to get better-paying jobs, full-time jobs created, so we can get consumers out there spending money, because consumer spending money will get this recovery turned around and unemployment down. In housing news, housing starts declined by nearly 10% from May 2013 to June 2013, dropping to 836,000 starts. Now, this was below expectations, and it was the lowest reading since August 2012. Now, remember, housing starts is the number of new construction builds that builders have started. So that's showing that new construction has slowed. Now, the other thing we look at in new construction is the number of new building permits, and that also dropped by 7.7%. Came in lower at 911,000 new building permits. We're expecting over 1 million. So, again, that's showing future construction is slowing. So not good news on new construction, but the numbers are still higher than they've been in 2 years. So it's still good, but not as good as we were hoping. In the local news, the next free first-time homebuyer seminar in Dover is this coming Saturday, July 27th from 10 a.m. to noon. That's at the Dover Sheraton. That's right on Route 13 in Dover. And then the next one in Newark is Saturday, August 17th from 10 a.m. to noon. That's at the Christiana Hilton Hotel. And that is again, Saturday, August 17th. You can register for either one of those seminars by giving us a call in the office, 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.